Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the first bullish scenario where we're looking for a 5-wave impulsive structure to the upside, which is unfinished as we are looking for this wave 4 to end. The common target area for your wave 4 is between the 0.236 and the 0.5 Fibonacci taken from the low of 2 to the high of 3, giving you a target area between 62.8k and 60.7k, with the invalidation being the 0.618 at 59.8k. Inside this target area for wave 4, we have the daily naked point of control as important support, 61.7k. After this wave 4, we're going to be looking for price to move towards the upside in a wave 5, preferably moving above the highs here at 67.2k because of the scenarios on the 4-hour time frame, where this impulse to the upside is then part of a wave A, B, and then a wave C in an expanding flat structure. A target for a wave 5 is the 0.618 on the chart, trend-based sub-extension taken from the low to the high of 3 to the current low that we have, and as you can see it is just above the highs at 67.2k. The second bullish scenario here is a finished impulsive structure to the upside in a wave 1, 2, 3, 4, 5 wave move, looking for a 3-wave corrective structure to the downside in a wave 2. Wave 2 most commonly is a zigzag structure in a 5-3-5, however it can be any corrective structure except for a triangle. The common target area for your wave 2 is the blue target area here between the 0.5 and the 786, taken from the low to the high of this wave 1, giving you a target area between 61k and 58.4k. The 0.382 is an uncommon target, but a target nonetheless at 62.1k, and the 886 is a very rare target for a wave 2. After this wave 2, we're going to be looking for a wave 3 to the upside, which should be the most impulsive and strongest wave towards the upside, where you expect price to move towards the higher edges of this range again above 70k. In the bearish scenario, we're labeling this high here as a wave C, and you want to see a move back towards the downside to take the lows. In this particular scenario, this move down is labeled as a wave 1, looking for 2, and then a bigger wave 3 to the downside, where also here we want to see an increased amount of volume to the downside, impulsive move, looking for the lows at 56k. Eventually, we then want to see a wave 4 and a wave 5. And this is where things start to get very interesting, because in the bullish scenario, we could have a zigzag to the downside, after which we want to see continuation. In the bearish scenario, we have an impulse to the downside. And this is where the 0.618 plays a very important role. If we do get a wave A, B, C, or a wave 1, 2, 3, and eventually a 4 and 5 to the downside, what we're going to be looking for is the next range. So if price moves down and volume is increasing, we always wait for a range to form, as that will give us all the information that we need. And what we then do is we take a fib from the high to wherever the low is going to be in case price would fall towards the downside, toggle on the 0.618, and then see if price moves towards the upside and hits the 0.618. If so, then the probabilities are higher. This is a 3-wave structure, and then we're going to move towards the upside and take the high, because the 0.618 is an invalidation for a wave 4, because in an impulsive structure you're looking for wave 1, 2, 3, sideways 4, which should be around the same length if not longer as wave 2 in time, and then another drop towards the downside where you do not want wave 4 to hit the 0.618. If we look at the CVD divergences, we do have bullish CVD divergences on the chart, higher low in price, lower low on the CVD on the 1-hour time frame here. As you can see, higher low in price, but on yellow, lower low on the CVD. That is a bullish CVD divergence, and the target is this high here. So if we then look at the probabilities of the different scenarios, then on the 1-hour time frame, currently the probabilities are higher for the bullish scenarios compared to the bearish scenarios, where we do like to see this high taken over here. And on the 15-minute, currently the probabilities based on what we see here are a little bit higher for price to take this a final low over here. We already took one low, which is something we were looking for earlier today, potentially here looking for that a second low. If price, however, would continue in this range, moving sideways and starts to grind towards the upside over here, with higher lows and higher highs and bullish CVD divergences visible as well, we may have a finished WXY in a flat complex structure and a zigzag looking for a continuation to the upside, but that very much depends on what price is going to do in this area. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.